We're live.
Well, hi, I'm Craig Huey.
And I'm Caleb Huey.
And we're about ready to start the webinar. And before we begin, we're grateful that you got here a little early, and we didn't want to leave you just hanging. So we wanted to talk about a couple of things. Caleb and I will be at Freedom Fest coming up in July, which will be a conference with 2,000 people and many different exhibitors of investment products and services, either under the Jobs Act or traditional investment. If you're planning to go to Freedom Fest, we'd love to meet you there and see you there, right?
Yes, absolutely.
Now, with Freedom Fest, some of the top investment advisors are going to be speaking, and it'll be an interesting conference because you get a sense at the money show and these conferences about where the investor's mind is at. Caleb, you were at the money show. What was the sense of the investors at the money show?
Investors are optimistic. Investors have not been optimistic for a long time. The investment marketplace has taken off in the last, I'd say, 8 months, where people are investing again. People are buying products and services again. People are spending their money. The economy has bounced back in a much stronger way. The market has followed, and people are more willing than ever to try a new product, new service, or invest their money in a place that they weren't before.
Yeah, I mean, it's a big transformation. You know, at the conference, before the election, people would sit there and listen to the speakers. But this time they were writing down the stock picks. It was a dramatic change. And so what we're seeing, and we're going to talk about this in the webinar, the psychology of the investor. And we're going to talk about the fact that right now the market's down. And so many investors are waiting for a market crash. And at the same time, there's this optimism of what will happen if there's a tax cut, an optimism about the economy booming. And so you've got all these different things going on. So as investment marketers, we have to make a decision. Who do we approach, and how do we say what we want to say? And of course, there's a whole issue in the investment marketplace of the Jobs Act. And we're going to talk about the Jobs Act a little bit in this webinar too, right, Caleb?
Yes, absolutely.
All right. So we're about ready to begin the webinar now. And so as we do so, I'll have Anthony introduce Caleb and myself, and then we'll get right into it. We've got lots of material to cover. We're going to have an intense time of going over what's working in the marketplace and what you need to do to be able to generate more leads and more sales.
And thank you for tuning in to today's webinar. We are glad you're here. My name is Anthony Borg, and I'll be moderating today's webinar. As we wait for the audience to build, allow me to introduce our speakers, Craig Huey and Caleb Huey. Craig Huey is a publisher of the industry newsletter Direct Marketing Update and president of Creative Direct Marketing Group Incorporated, a full-service direct response advertising agency. He is the author of several books, including his latest called 16 Secrets to Raising Capital from Investors from Equity Crowdfunding. Craig has the distinction of being recognized as one of the nation's top direct response marketing experts. His insight and on-target strategies have generated more investors' subscribes, leads, and sales than anyone else in the industry. Over the years, CDMG's marketing programs have garnered 86 major industry awards. Caleb is Vice President of Creative Strategy. For over 10 years, he has been on TV, spoken at conferences, and helped provide investment marketers with new ways to expand and grow. Craig and Caleb have made millionaires out of entrepreneurs and helped grow million-dollar organizations to even higher levels of success. Please welcome Craig Huey and Caleb Huey to today's webinar, 18 New Trends for Marketing Investment Products and Services. Over to you, Craig and Caleb.
Hey, thanks, Anthony. Well, listen, welcome, and we do have a lot of material to cover. So, what do you want to accomplish in the next 12 months? More leads, more conversions, more sales? Well, we're going to show tested, proven secrets to supercharge your response and be able to really transform your marketing. And we're going to look at, SEO, Facebook, direct mail, email, so many different things that are happening in the marketplace. And too many investment marketers are not doing things either properly or ignoring some of the major trends that impact their bottom line results. So we've got 18 trends we're going to be covering. And, many marketers fall into some very costly blunders. It's like money just running through their fingers. They make some terrible mistakes, losing market share and losing time. So today, Caleb and I are going to equip you with specific suggestions to help make your competition irrelevant and help you dominate your market with your product or service. Now, we've got marketers all over the world. Caleb, I looked at the list and I saw that there's people in Europe and Canada, Asia, and we've got most of the people here in the U.S., people who market precious metals, who are involved in investment relations, people who are marketing mutual funds, brokerages, insurance products, just so many different products and services, subscriptions for newsletters and websites, a variety of different products and services. But these 18 trends apply to almost every single marketer there is. So as we take a look, I'd like to start with the idea that you need to reinvent your marketing. You need to re-examine your current company's marketing initiatives and assumptions. And, I think the starting point is talking about the number one blunder most investor marketers make. There are a lot of different things that you could come back to me with. When I'm at a conference and I have people raising their hands, I get some pretty good answers of what the number one blunder would be. But the number one blunder is using traditional image advertising versus direct response advertising. You see, direct response advertising is a whole different way of being able to look at marketing. It's scientific advertising. It's multimedia integrated advertising, and it's always knowing your cost per lead, cost per sale, developing a lifetime value, and having a unique selling proposition that distinguishes you from everyone else. So it's scientific advertising, and that's the framework of what everything is we're going to be talking about. Now, the first trend we want to cover is the new integrated marketing that's going on today. Now, follow me on this, because with the new integrated marketing, you're going to be able to increase your response rates 20, 30, 40, maybe 50%. And with the integrated marketing, basically what you have is this. You come up with modeled, optimized data, and we're going to explain this shortly. And from that same data, where we identify the active investors most likely to be interested in your product or service, we do an integrated multi-channel approach where we send direct mail, banner ads, email, pre-rolls, Facebook ads, Twitter ads, all to the same names. They're all to the same integrated names. And so it gets a much higher response, and it's a new way of marketing. So an example here is this campaign we did where you see this product launch for a new publication. And with this new publication, you can see that there was a variety of different marketing, the email, the banner ads, the Facebook, all to the same names. And that gets the highest percent of return possible. So in doing an integrated marketing campaign, if we were doing this webinar about 5 years ago, this type of tightly integrated campaign would not be possible, but it is possible today. Caleb, what have you seen with the integrated marketing? Have you seen that this has created a higher response rate?
Yes, it has. When we put together a list of prospects for a client, we always start, if they have an existing list of customers, that list of customers. And we can either build a lookalike model of their customers and advertise to people that with 99% accuracy look like their existing customer base. Or we can put together a very intelligent campaign to identify the kind of person that should be a customer of theirs if they don't have an existing customer base. And we integrate every component of marketing, whether it's direct mail, emails, Facebook ads, all going to the same group. So if I'm marketing to 100,000 prospects that could be money management clients, then that 100,000 person group is going to receive a direct mail piece, banner ads, Facebook ads, and pre-roll video online, as well as any other kind of media mix that we might move forward with, all hitting them for about 3 to 4 weeks. So they won't be able to get away from your message for about a month's time, depending on how long we want to do the media buying program.
It's a pretty dramatic way to be able to educate, inform, motivate, and acquire that new prospect or customer. And part of that has to do with a second trend, and that is this incredible new opportunity of creating lookalike audiences. You see, there's 4 different types of lookalike audiences based on different types of principles. I'm going to have Caleb talk about the lookalike audience for direct mail. And with direct mail, it's based upon transactional data versus banner ads, Facebook, and pre-rolls, which is based upon algorithms of what people click. There's a distinction. So Caleb, you want to kind of explain the lookalike and the power that every marketer has of expanding their marketplace and increasing their profitability?
I will. So if anybody on the webinar is familiar with Facebook's lookalike option, they can take a list of followers or of customers of yours and then serve ads only to people that look like your audience. And when I say look like, I mean they click on the same kind of content as your audience. Now, those people might be interested in the same kind of information that your audience is interested in. If they read a lot of investment information, for instance, online, and other people that read that same kind of investment information, they will be served an ad if you're doing one of these lookalike campaigns. We go a step beyond simply using the built-in lookalike models that Facebook and Google and the other platforms offer, where we first do a transactional lookalike model. That transactional lookalike model is much stronger than somebody simply clicking on the same kind of information as your audience. Instead, we use metadata based on transactions. So it's people that buy the same kind of thing as your audience that has bought from you. So it's an actual purchaser that looks like your purchaser instead of simply an individual that is interested in the same kind of information and reads the same kind of information. Here's an example of a person that has the metadata assigned to their transactional record. Now, these big data companies like Oracle house thousands and thousands of pieces of information on every consumer. So the consumers have these tags of information. For instance, this person, $350,000 in income. They have a $5 million net worth. And they have used direct response, as in they have responded or bought something through a direct mail solicitation in the last 12 months. So we know that if we send them a direct mail piece, they actually might buy from that direct mail piece. This person also subscribes to travel magazines. They have since 2013. They moved from Portland. They moved to Portland from California. We have their address, obviously, and their phone number and their email address. They are a high-end clothing product buyer. They've spent $150 on denim jeans. We can see that they are global buyers. They're not afraid of buying things online. So we have all of these pieces of information assigned to an individual's records. So again, we can either take a look at what your audience has in common as far as purchases, and then find other people that have those purchases and advertise to them. Or we can use these specific pieces of information to say that we want a group that is a high net worth individual that spends money on high-end products, has a brokerage account, and has made transactions in that brokerage account, where we build a model of who your likely customer base will be. So two kinds of ways of building the list for us to use to promote to.
Yes, and what it does, it enables us then to get a much higher response. And so I've had clients where they've dramatically expanded their universe of potential, almost doubling it, and then also increasing dramatically their response rate. So take a look at this new graphic where you see the difference between non-modeled response rates and the modeled response rates. Pretty huge difference that you have there. And with this type of look-alike transactional data, it is almost scary how accurate it is. It's almost scary how perfect it is in being able to identify your perfect investor. Now, Caleb, go ahead and explain about banner ads with Google, Facebook, and pre-roll, and how that differs than this.
Sure. What I explained earlier is the difference between the transactional models versus the models that are built in, the lookalike models built in by Google and Facebook. Again, Google will search through what your audience searches in Google and then serve ads to other people that search for that same kind of information. Facebook will look at what your group clicks on in Facebook and then advertise to other people that click on the same kind of information in Facebook. The problem with that is you may end up getting tire kickers that read a lot of information that aren't actually buyers. So what we're talking about is going after people that have a lookalike transactional model, people that buy the same stuff, that are actual buyers, not tire kickers.
Exactly. And then the one little secret that we're using that's pretty powerful. Sometimes it takes a long time for the algorithms, for example, on Facebook, to be able to start identifying your current best audience. What we do is we'll have the transactional data from the direct mail. We'll take that custom list and put it into Facebook, and then not only will we be able to market through Facebook to the people that we have for the direct mail and the email, but then we do a lookalike based upon the transactional data. So we've already done the work of finding that perfect type of audience, and then that enables Facebook to even do a better job. Now, let's talk about the third trend. And the third trend I want to talk about is called a Videolog. Now, if you have not seen my video on the Videolog, I welcome you to do so. But I'm going to show you a little example of it. We have a major client corporation right now as a client, where we're going to be doing a video log just to top executives for their financial product. And these things are so powerful, and they're so new. They have this wow effect. Wow, what is this? And what does it do? Well, you get a direct mail piece, and in that direct mail piece, you open it up, and what happens is a video actually plays. And I'd like to show that to you here. Hi, I'm Craig Huey, president of Creative Direct Marketing Group. And a few months ago, I did a video briefing about a brand new technology called a Videolog. A lot of people are interested in it because you can generate leads, be able to make sales, raise funds with this new technology that blends video and direct mail. You know, over the years I've done 300 TV commercials and videos and 13 infomercials. I've done millions and millions and millions of direct mail pieces. But this is probably the most powerful I've ever seen, where you're combining the two technologies. For example, you get the envelope, you open it up, and what you find inside is a piece that you would want to open. When you open this, what will happen immediately is the video begins. So you have the video telling your story. 3 minutes, 30 minutes, whatever time. This could be thicker, this could be bigger, it could be smaller. And then as the person's watching that video, you're motivating them to want to generate that lead, that sale, that contribution. What will happen then is they can push as an option this additional button, and it'll make an immediate phone call to your office or to your call center. What a powerful way to communicate. And this is something that you can use right now, whether it's business to business, to the consumer. It's a powerful way to communicate and generate that lead or sale. Give me a call. I'd love to talk to you about it, how it can be used for you. Give me a call at 310-212-5727. Thanks. All right, so the Videolog is a powerful, powerful tool. And that might be something you might want to consider if you have a smaller audience where there's a huge margin involved with it. So now the fourth trend I want to talk about is one that deals with video and this huge explosion on video. Caleb, do you want to start off with what's going on with the video today?
Sure. When we put together a video, there's a lot that we can do. We first and foremost will create a sales video, and it can be 30 seconds, it can be 3 minutes, it can be, in this case, 12 minutes, as you can see on the screen. And we're going to put it on the landing page. Now, whether or not a prospect watches the video, having a video, number one, increases response. Number two, if we tell people that there's a video on a banner ad or a Facebook ad, they're more likely to click, even if they don't watch it. So we always give the option to watch the video, and always have a video on the landing page where they're going to end up having the call to action and driven to actually purchase. Now with that video, we can do far more than simply put it on the landing page today. We can embed it in their Facebook ad so it auto plays as they're scrolling through Facebook to pitch them right there in Facebook. We can put it in the email. We obviously drive them to the landing page there so they can watch it on the landing page. Banner ads, again, we tell them that there is a video available for them to watch, and we can use it as a TV commercial placed online using pre-roll advertising. And we can get to some of the pre-roll advertising coming up shortly. But the video can be utilized in a lot of ways today, and having a video is going to increase your response by about 15%.
Yeah, and quite frankly, the video, like Caleb says, it increases your response. Whether it's Facebook, banner ads, or email, you're going to get better response if you actually have that as the prominent feature in those marketing features. And then, like with Facebook and SEO with Google, you get higher rankings when you have video. You get more play when you have video. And not only that, has been the trend that the more PowerPoint video or video that actually has the words, that's where Facebook really rewards you. And you know, we've done over 400 videos and TV commercials, even 13 infomercials. So I love how we are able to use this to be able to increase response, which brings us to the next trend, which is TrueView or pre-rolls. Caleb, you want to explain why this is so exciting and how any investment marketer can find that this will be an important part of their campaign?
Yes, the Google TrueView, which I had mentioned earlier, in pre-roll, is where we utilize that video asset that we've created for one of our clients, and we put it into YouTube or into pre-roll placement online. So if a prospect goes to click on a Jim Cramer video, an update on the market, let's say, when they click to watch his video, we're going to serve them the TV commercial before they can watch the Jim Cramer commercial. Now, we only pay if the person watches more than 30 seconds of the video that we are presenting to them, or if they click. So it's somebody that truly is interested in your product or service and is being driven to your landing page to make that purchasing decision.
Yep, and they're very, very powerful. You know, we're in like maybe the third week or fourth week of a campaign right now, where we're using a multi-channel campaign, and we have about 60,000 unique visitors. And if they got on Fox Business or CNBC or YouTube to watch anything investment, our pre-roll commercial comes up. And it's an important part of any campaign. So with that, let's take a look at the next trend, which is about banner ads. You know, banner ads were really in decline until remarketing came along, and banner ads today are usually an important part of any type of campaign, especially when it comes to remarketing. So Caleb, can you briefly go over what we're doing today with banner ads and what these marketers should be putting into their campaigns?
Everybody should have seen this by now. If you haven't, you must not go online very often. When you land on somebody's landing page or somebody's website, and then you go somewhere else online, that banner ad should be following you, reminding you that you were looking at a pair of jeans or a pair of shoes, or in a lot of your cases, your investment opportunity, your money management service, your newsletter, whatever it may be. That banner ad should follow a prospect for a matter of months, bringing them back to that landing page and selling them on your service or product. Remarketing and banner ads are huge for marketers that are looking to continue to get in front of the right kind of prospect. The person that's on your website already and that has seen your message, remarketing to them is going to increase your response by at least 30%.
And one of the keys is finding out when somebody comes to your landing page, where do you put that remarketing code and what banner ads do you serve to them? For example, if you've got somebody who's come to your landing page and they're reading about what your investment opportunity is, that's a little bit different if they've actually come to the shopping cart because they're going to order a subscription, or if they're raising their hands for a lead. You want to serve them a different type of banner ad than just everybody else. So you can be very specific, very detailed, and very targeted. Now, the seventh trend deals with Facebook. And there's so much going on with Facebook. They're becoming the investment marketer's best friend. So Caleb, you want to kind of go down some of this list of different things that are going on with Facebook and that are working real well for investment marketers?
Absolutely. The first is a custom list. If you have a list of people that are prospects, you can take that list, put it into Facebook, and only advertise to the people on that list. It's a great way for people that have built a prospect list over time to continue to market to those people on a platform that integrates content into the content they're already browsing. It's great. From that custom list, whether it's your prospects that you're marketing to or your current clients that you upload as a custom list, You can do the lookalike campaign that takes a look at the list and what those people have in common, and then serves an ad to people that look like that group of people. So going back to the lookalike campaign, we can do display ads, which is what you see below, which show up on the right side if somebody's browsing Facebook on their laptop or on their desktop. And then newsfeed ads, which is the most common, which serves an ad that looks like the content that they're already browsing. So I'm sure you've seen ads if you are on Facebook that are mixed in with the content that you're looking at that's in your newsfeed. And we can place those and target the right kind of people using those. And then remarketing. So if a person or a prospect has landed on your landing page, we tag them with a pixel, and an ad in Facebook will come up for your product or service after they leave that landing page, bringing them back to your landing page so they buy.
Right. And then, there's all kinds of new functions that Facebook keeps coming up with. And these new functions are really pretty powerful. Right now, we have a client that has a $10,000 a month budget, another one that has $60,000 a month. But one of the things we're doing is we're doing the ability that when somebody is generating a lead, the Facebook will actually give you their complete contact information, their address. They will give them their give you the telephone number if they have it. I mean, they'll give you everything about that person. So all the person has to do is click, and the form is automatically filled out. That's where we are able to generate so many new leads in a much more efficient way than ever before. And that's because Facebook is always thinking in terms of how to improve on this marketing. And as they do so, when you talk about these different ads, as you can see from the next slide, the ads that you have, 70% of the success or failure is going to be the ad headline. You always test. You got to follow the direct response copy rules that we'll talk about shortly. And you've got to make sure that the ads have good content, both in the ad and when you get to the landing page. Otherwise, you're going to have problems with approval. And we're always trying to make sure we figure out how to make sure we get video in there. And the landing page matches up to the headline. And when you do this, you're going to have much more success. And one of the keys, both for Facebook and the banner ads, is to make sure everything that you do with these ads is mobile friendly, because you're going to get 25% more clicks with the mobile, 15% more conversions. Most of the people are looking at it through their mobile phone. And probably the biggest problem is most investment marketers, they create their landing page for a desktop, and then they use an automatic function that just kind of spreads things out without any logical order, just so it fits as mobile optimized. But then it's not logical from a human standpoint, and you destroy your sales message. So it's very important to be able to create specific mobile optimized type of ads. So the next one goes back to email. You know, some people claim that email is dead. Well, the truth is the rules of email are changing. You got to follow the 3 R's of email marketing to prospects. One, it has to be relevant. Second, it has to be, great reputation. And 3, it has to be rewarding, great value. So, email still works. I still send out 2 to 3 million emails every month. The emails have to be value added. When somebody sees an email, they got to be able to see that email in such a way that they want to see your next email. Most people look at about 16 emails, daily from people that are not business or friends. And if your email is perceived simply to be a sales piece, you're going to be deleted mentally, if not physically, send to cyberspace. And when we deal with emails, we like to have deadlines. We like to be able to show the video on there. We like to be able to have powerful testing of subject lines, charts for investors. Investors believe charts and they respond better when they see charts. There should be a personality, not a corporation. More text is better than more visuals. And some of these things are able to help increase your overall response. So when we talk about this, that would lead us to number 9. And number 9 is profiling and pursuit. There's a variety of ways that people are leaving money on the table by not going after your prospects. And so when you gather a name, you need to have a powerful email going out to them. You need to make sure on the website and landing pages you're collecting data. You have floaters that are being able to capture email addresses. You need to make sure that you're creating these custom lists where you're going after people in a systematic way. You can do petitions, questionnaires, address verification, and a powerful conversion series. And Caleb, you want to explain about the conversion series and why that is so important?
Yeah, a conversion series is an automatic series that people are put into when they become a prospect. So if somebody fills out a lead form, or if you collect their email or address in some way, they automatically should be put into a series of several emails, have remarketing with banner ads and Facebook ads and even Twitter ads, serving to those individuals that have been to your website. So that we typically think of a conversion series as email only, but some even mix a direct mail piece into the mix. Now, for us, we typically do a 7-part conversion series, and in some cases, we do a 12-part. And now we can space it out a few days apart, a week apart, 2 weeks apart, continuing to reach out with a new message to that prospect, bringing them back to make a final positive buying decision.
And closely related is trend number 10, that more and more marketers are not just doing retargeting and custom list and email to their prospect list to maximize conversion, but they're also putting in what Caleb mentioned was the direct mail. So we call that direct mail remarketing, where we actually are sending the direct mail piece to the people who are responding to the online campaigns, and becomes a very powerful part of the campaign. Then we have number 11. Trend number 11 deals with the direct mail resurgence. And with direct mail resurgence, let me just mention a couple of things. For those who have watched the investment marketplace for quite a while, there's several different types of formats that people use. One is a magalog. A magalog looks like a magazine, feels like a magazine, but it's an infomercial in print, and they work very well. And the other one is called a bookalog. A bookalog looks like a book, feels like a book, but it's really a sales piece. And these are powerful direct mail pieces to be able to generate new leads or new customers. When we do magalogs, we like to do cover tests. And so with the cover tests, what we'll do is we'll, to the same names, divide, let's say if it's 100,000 names, we'll divide it between 50,000 version A, 50,000 version B. And in this case, we tested these two covers to be able to see which one works best. And you can see one emphasizes for the investor about side effect changes and hello profits versus the rare FDA favor. And here's the thing, marketers can always guess, but the marketplace is always right. So in this case, version A got about 35% higher return. And so that became the control. Then the next type of direct mail piece that investment marketers make will do is called the three-dimensional piece. And so with the three-dimensional piece, we go ahead and send by Federal Express or UPS a package that commands attention. And they open it up and they go, wow, here's one for financial advisors to those who have estates of $3 million and more. And this was part of a total campaign to that group of people. And these type of campaigns will usually get 15, 25, 30%, in best case situations, about 4 or 5% in others. But it's a high percent of response, and usually requires a phone call as a follow-up. And you can see we've done this. These are a couple ones in investment relation campaigns to draw people to learn about a company and being able to educate them on that opportunity. Now, the other type of marketing that we have is dealing with an envelope mailing. This is a 9x12 envelope. Millions of these pieces mailed because they work and they stand out so much in the marketplace. And as you'll see from the next slide, we have a high quality personalized envelope. And the high quality personalized envelope has a pre-canceled stamp, and it looks like a real stamp, and it looks like it's handwritten. And those increase response very, very well. And then anytime we do these type of direct mail pieces, we try to do a test. So as you can see from this test, this is one for a Jobs Act to go to investors. And it's an envelope with teaser copy. And we tested version A versus version B. In this case, version B got about a 20% higher response rate than version A. And so you always test and see, why do people put lots of copy on the envelope? Because mentally people start thinking in terms of what it is you're going to say inside, and it gets a higher response rate normally than having just a blank envelope. And in any of these campaigns, we use a different stamp strategy. So in this case, you can see a meter envelope, a pre-canceled stamp, and a pre-printed indicia. A pre-canceled stamp will get about a 12 to 15% increase in response over the printed indicia, and the meter envelope will get about an 8 to 10% response more than the printed indicia. So you always want to use a pre-canceled stamp. Now, the next slide is about this letter, the quality letter. Excuse me for the delay on my screen here. So the letter is absolutely critical. The letter is the #1 component to success in your campaign. Let me show you some test results on that. We have a brochure in an envelope got a 0.5% return. A self-mailer got a 1%. Elaborate brochure and short letter in the envelope got a 3.2. A letter and brochure combination in the envelope got a 4. But the brief brochure and the long letter, 7.3% to a database. You see, this type of response rate is pretty dramatic, and that's the type of strategy that would be good to use. Now, 12th trend is retromarketing with a Newsalog, and I love this. Caleb, do you want to explain about the Newsalog?
Sure. If you are a subscriber to Investor Business Daily or the Wall Street Journal, or if you've simply been a subscriber to any newspaper in the past, you're familiar with the layout and with the masthead and the flow of a newspaper. Well, we've taken that model and we've turned it into a sales piece where we have a headline an advertorial type headline. And we have a main article that goes through the entire newspaper and ends with a call to action. And it asks for you to subscribe to that newsletter or call for more information about this money management firm and how you can trust them with your money. These typically are 16 pages long, just like the Magalog that we had mentioned earlier. And they're broken up into articles. They can talk about the industry at large and why your product or service is better than your competitors. And it has one main article that goes from the beginning to the end with the call to action, highlighting all of the benefits of your product or service. The response rates are great, and they do cost a bit more than the other direct mail pieces, but we always look at the return on investment. If you're getting a higher response and your return is better, then it's a better way to go.
Yep. In 2014, these were unknown. We started testing these so that by 2015, we had mailed about 5 million of these, proving that they work better than other types of direct mail, partially because of the novelty and the uniqueness of them. So they're certainly part of a investment marketer's arsenal of options to be able to use and certainly get response and attention. One other thing about it has to do with the fact that also we can actually personalize and localize any of the headlines. All right, so now exhibit marketing. Real quickly, many of the people here on this webinar exhibit at the Money Show or Freedom Fest or some of these other shows. If that's you, I have a complete outline of what to do at these shows. But let me just say, anytime you do exhibit marketing, you want to do a pre-show marketing campaign. Then you want to make sure your booth is absolutely top in regards to using the direct response copy. Most companies have at the top the name of the company. That's horrible. You want to be able to have a strategy to be able to draw me in and create a question and have me start thinking about your product or service. Location-wise, most people, when they come into an exhibit hall, they go to the right. And you need to have a strategy that works on that. And then a post-show strategy of how you market to the people who went to the show. And you want to do it in two ways. One, those who went to your booth and gave you their contact information. The other way is to be able to do it just to those people who you did gather their data. Email, texting, create testimonials at the show, variety of different things that can be done to make a show powerful. Trend number 14 has to do with mobile marketing. I mentioned to you most 70, 80, sometimes 90% of the investor will use their mobile device to be able to review. And so, Caleb, you want to mention a few things about using the mobile marketing of today?
Sure. When you are building your landing page or your website or wherever people are going to be responding to you, you need to optimize for mobile, because a majority of the traffic these days, even to an elderly audience, is going to wind up being from somebody's phone. People check emails on their phone. They respond to that email on their phone by clicking the link and going to a landing page. People read content online. They might see a banner ad and be intrigued by the headline and click to your landing page. So it needs to be optimized for mobile. That most people these days will browse Facebook on their mobile instead of their desktop computer. So again, your landing page has to be optimized for mobile marketing. And if it's not, you're going to have a disjointed experience from that consumer and probably going to have them bounce and not convert into a customer.
And like we said, video is critical to it. And the other thing is this: how do you communicate with your prospects? You want to always get your prospect's cell phone number, because you have 95% of the people, when they get a cell phone text from you, they're going to read it. and you're going to get a very high response rate if that message is important. So it's critical that you're strategic about your message, but you should have as part of your lead generation and client servicing mobile marketing. Even when you're at a show or a meeting, tell people that they can get a free download of this special report. Show them your cell phone, say, text this number. And when they text that number, you'll get their name, you'll get their email address, you'll get their cell phone number, you'll start collecting that data. And you want to be able to do it. It's the major trend, and it's a very profitable way of being able to market. So the next trend we want to go over real quickly is the native advertising boom. This has been around for many years, but only recently has it really taken off. And part of the reason it's taken off is because the dying news media, newspapers and magazines are a hard copy that have been going down in circulation. They've opened it up, but so has online. In fact, Facebook and Google prefer to have, and many times, more content. And so the native advertising is something that you need to consider. We love creating these native advertising campaigns where it looks like an article, feels like an article, but it's really marketing and advertising content. The other issue has to do with the trend in copy. The direct response copy, it's the mega difference, whether it's online or hard copy. That is critical. And right now, the market is going down. And what we've learned is that when the market goes down, there comes in some skepticism and some fear. If the market's down for a long time, you have paralysis. So we have this list: paralysis, fear, skepticism, open, and greed. And we've been in the area of greed for quite a while. And people are buying, and people are participating in the market. But that changes. And so your copy and your marketing, you need to know your investor, you know what they're thinking now as you're doing your marketing, and keep on top of it. And when you do your marketing, remember M squared. And with M squared, basically what that is this. It's avoiding myopic marketing. Myopic marketing. That's where most marketers speak to themselves. They're not speaking to the prospect. Most marketers don't have a single theme, something that's very specific. And they're not specific in the detail. Instead of saying, we've spent a great deal of money in research for this software. We spent $852,922. They're not conversational. They don't have a U orientation. It's not easy to read. There isn't the drama and surprise. And any copy that you have should go through the Flesch Kincaid FK, where it's 8.5 or less. You don't do that, you're not going to get as good a response. And then very critical has to do with being able to have benefits, not features. Yeah, most marketers are always talking about their features. Like, let's take this software. The feature is it provides real-time market data and analysis, but the benefit is you have immediate access to the same in-depth information as professional traders. But the ultimate benefit is pinpoint your next big profit opportunity with the same tools that Wall Street traders have at a fraction of the cost. You do this, you're going to increase your overall response. And when we talk about marketing with this, you want to have a reality in the advertising. You want to address the marketing evils with preemptive copy. What's on their mind? What's their greatest fear? What's keeping them up at night? And you want to hit the key emotional triggers. Avoid losing money, potential new crash, prudent risk, quick profits, big profits. What are the emotional triggers you want to really push? And then at the end of your copy presentation, you need to ask yourself, first of all, number one, does it grab my attention right away? Number two, does it recognize self-interest, pain, and fear? 3, do I recognize immediately a good value proposition? 4, is it written to me and me alone? 5, do I feel the writer really cares about me? 6, do I feel the writer believes what he is saying? 7, do I believe the writer? 8, why should I invest now and not later? And 9, is there an alternative to your company? And then 10, do I feel safe and comfortable about responding? You've got to make sure you overcome with preemptive copy these 10 deal killers. Then trend number 17, the offer. You got to have powerful discounts if that's appropriate. Certainly premiums, editorial premiums in particular. You have to have a powerful call to action, CTA, and maybe even perks. With most traditional investments, that doesn't work. But in the case of the Jobs Act, as you'll see from this example, this is for a Jobs Act marketing campaign we did with a Magalog. And with this copy, you can see that we're giving away for this offer different types of bonus reports. When that's kind of the traditional offer, that works really well. But in this case, for Star Shop, we created one where you actually get different types of perks like conferences and concerts and special meetings, because you can do a lot more. Okay, going on to the next slide. And so you think in terms of how you create a powerful offer. All right, and then trend 18, anti-marketing madness. What's your website strategy? If you're using your corporate site, that's an anti-marketing thing to do. You want to have a landing page without navigational distraction and emphasize data collection. So key to all this marketing and wrapping it all together with all the things you're doing, the focus point so much is the landing page. You got to make sure that you have that correct. So let's put it all together. I hope that this has been useful and helpful, giving you some new ideas and new concepts. And if there's some questions, you need some additional information on any of these trends, Caleb or I would be happy to talk to you about it. And then I'm not sure how long we have for questions, but let me try to answer this first question. Where are the questions? As far as when to market, one of the questions we have is, when do you market? Well, when the market's going up, it's great to market. Unless you have something like the Prudent Bear Fund, one of my clients that markets well during a bear market, you want to market when the market's going up and increase your marketing. When the market's going down, you kind of slow up. And there's certain times of the year that are the best. The last week of August, beginning of September is the second best time of the year. And the last week of December and the first few weeks of January, that's the best time of the year. And the worst time of the year, right at tax time, when the investor is depressed. The other months are pretty much the same, some 5 to 10% fluctuation. So Caleb or I would be glad to talk to you about any of that. So let's see. The other questions, we'd be glad to answer. We're going to answer those other questions individually just because of the time, and we only have a couple of minutes left. So if you've got questions, do feel free to call the number on your screen or email us to our email address, and we'll be glad to answer any question you have. Caleb, do you have any last thoughts or comments?
No, other than thank you very much for attending. I hope everybody found value in the insights that we shared.
All right. Thanks so much. Be glad to talk to you about any of the information we went over. And this is an exciting time. It's time to try something new. It's time to reinvent your marketing. And if we can help you do it, that'd be great. Okay. Thanks.